Hello, and welcome back to The Investor's Opinion. Is Fiverr a good investment? Is your portfolio in need of a growth stock? A speculative, high growth, high quality growth stock? Maybe even something that can grow in spite of the pandemic? Well, introducing Fiverr. It's a company that facilitates a website that connects buyers to sellers and sellers to buyers through the use of gigs. So first, with the business model, we can dive straight in. Fiverr operates a website that facilitates both buyers looking for sellers as well as sellers looking for buyers through the use of a reputation-based structure. Fiverr originally got its name from offering these gigs at $5. Essentially, this evolved into something a lot more than it originally was, which was just something like these YouTube clips where, well, I guess PewDiePie paying some African guy to say certain anti-Semitic comments. However, the website has evolved into something a little bit more, well, long-term. Fiverr has become, and most likely will be, one of the strongest and most highly profitable players in the gig economy market. This is due to its social media-like structure, where it operates in the same way that Facebook Market operates, but on a much more refined scale, and specifically for one of the 8 verticals and 300 categories that are contained in those verticals. These verticals are graphics design, digital marketing, writing and translation, video and animation, music and audio, programming and tech, business, and lifestyle. This is a very broad category, and many of these sellers actually do incredibly well, some even boasting about a $1+ million US income per year. This is due to some of these gigs being specialist in nature, and also companies being able to use one of Fiverr's 3 other methodologies of actually grouping freelancers into a single group project and actually being incredibly successful. Co, Clear Voice, and Fiverr Learn are 3 other products Fiverr offer to actually facilitate and educate freelancers and aid them in their marketing and their business structure. Clear Voice also enables businesses to group and purchase multiple freelancers to create one massive project to get done in an incredible turnaround at very, very low market fees, as opposed to going to a private company to do one massive job. This has enabled individual freelancers or groups of freelancers to actually become really competitive in the employment space. Fiverr's primary revenue source is through their sellers. However, they do also fee the buyer. The seller's fee is 20%, whereas buyers pay a rate which is dependent on whether or not it's under 40 or over 40, $2 under, 5% of the fee above. This means that as long as Fiverr increases its user base and average consumer expenditure, the company should grow quite significantly. Fiverr is unique in its gig economy business model, and that is because it basically focus on purely the logistics and the facilitation of the gig economy. It doesn't try to become a part of it. It just wants to give a backboard for the individuals who wish to use that sort of employment or self-employment method. Now that I've talked about the business structure and the modeling, let's move on to the qualitative. So on this channel, as usual, we do a SWOT analysis, SWOT, strengths, weaknesses, opportunities, and threats. And then we move on finally to an economic moat, or we talk about what is Fiverr's or the company competitive advantage. So jumping straight into the strengths here, the gig economy model that they use for their business is simple, low cost, and incredibly efficient. And if anyone has actually used their website, they will know how good the functions are for communication and billing. Revenue growth is likely going to continue to be massive, and this is always going to have been a strength for such a company that's in its early business cycle. But due to the pandemic and the unemployment rate rising at incredible rates, this means that the gig economy model is almost in its flourishing moment. It needs to be able to provide the income for these people that have lost their jobs. And as long as it can do so in a fast and effective and cheap manner, their revenue should grow tenfold and beat guidance, which it has time and time again. From my own opinion, I believe that Fiverr's reputation-based structure within their website is actually one of the best reputation-based structures for sellers I have ever seen in a gig-based model. Uber's I find quite disingenuous. I feel like it's a little bit easier to fudge the data And I also feel like it's hard to rate a taxi driver from 1 to 5 when the particular points that you're rating them on are a little bit iffy and you're only seeing them for anywhere between 5 and 20 minutes. Whereas when you operate with someone on Fiverr, their reputation is somewhat a lot more substantial. This is because when someone uses their website, there's a lot more communication backwards and forth, especially if you were looking at someone to design graphics for you. You would want that your graphics design would be personally what you want to pay for. So these sellers create this art of communication to make sure that they design exactly what you want. And if people don't do that well, they get terrible ratings. But if they do it well and they do it great, they'll get great ratings and they'll get more customers and they'll get better ratings. And the system will reward the best and hopefully disenfranchise the worst. Fiverr also has a very broad range of verticals in comparison to most of its competitors. It entered the market in the lower side of the income gig economy bracket with basically just funny things or very, very basic jobs that could be done over the internet. The company has also entered into the broader markets that Upwork even operate in, with Fiverr Pro and Fiverr Business enabling large project works with businesses with also high quality. They've been on the website for a long period of time, sort of producers who charge a premium for a premium service. So as far as the gig economy model goes, all the positives and strengths here basically indicate that this player is very well positioned to capitalize on that market. However, moving on to the weaknesses, the primary weakness of this gig economy model and of all gig economy models, including Upwork and Uber, are regulatory headwinds. And this is because the EU and most countries in the world, especially in the Commonwealth, freelancers have no employment protection. New Zealand has a big problem with it in regards to their career services, where people pay large amounts of startup overhead just to get a job when they get paid less than minimum wage after they do their regular amount of hours. These non-formal employees or workers deserve better rights. But will that affect the business structure of these companies? We're yet to see, and the uncertainty is there and must be calculated into your investment thesis. Moving straight on to the opportunities, international expansion, growth in spite of the pandemic, and long-term growth for this very young company are all incredible opportunities for you as an investor to potentially take a hold of. International expansion has been a wild success for this company. It has been adopted quite rigorously, even to the fact where my partner's brother came up to me and told me, hey, if you want to design a new thing for your channel, you should try and look at Fiverr. And I was like, that's usually a dead giveaway, right? Mostly because I remember a story about Warren Buffett and why he invested in Coca-Cola as opposed to any other pop or fast food chain or whatever. It's because when he was younger, he collected bottle caps. And he noticed that over a wee while that most of the bottle caps he collected were all Coca-Cola and other. He realized that this meant that Coca-Cola may objectively be the best soda over the broad population, and decided that that is exactly what you want to invest in. If we apply that same principle here, its adoption and now community integration even into New Zealand, that's just a really good sign of its stickiness with the consumer. Jumping straight towards the threats, along with the potential non-formal employment legislation that could come out in the not too distant future that may damage the margins or even completely obliterate some gig economy based companies. The primary issues and threats that we have for this company are competition, like new entrants, as well as the sector itself being super unknown. We don't know whether or not the gig economy model will be something that will be around for a very long period of time or a very short period of time. However, personally, I like the model. I think that freelancer and self-employment is the future. So the last part of our qualitative analysis is our economic moat. The economic moat of Fiverr is quite unique. It's not that its product is super sticky. It's the fact that their reputation model, along with their broad market encapsulation during this pandemic, they all work in tandem to and basically enable this company to adapt, grow, and become a household name within the sake of a year. People are starting to talk about Fiverr, especially from the commercial sector, as the go-to freelancer tool for small businesses to even large businesses now for a really cost-effective means. Upwork is struggling in this fact as Fiverr seems to be outpacing their growth 10 to none. And this is mostly due to their smaller gig economy packages like their $15, $10 ones, where people from anywhere like you and me can just jump on the website, log in through Facebook, and just buy something in the space of 24 hours, have an amazing turnaround, and get the service that you wanted at, very likely, if you pick the right seller, a really good quality. There are no other company on the market right now that can compete with Fiverr on its broader verticals and its massive international expansion. It seeks to become a household name for freelancers. Moving on to the quantitatives now, we can have a quick look at what we expect, then we'll have a look at the income and cash flow statement, then we will have a quick gaze at the balance sheet just to make sure that everything's in the right order. What we are expecting from Fiverr is that revenue and growth to remain as high as physically possible for a company in such an emerging sector. And this has actually happened quite a bit now because we're actually seeing this revenue growth come very, very fast. We expect to see user growth at this period of time be very linear in its relationship to revenue growth. And this is primarily due to the fact that revenue growth is directly correlated with how many people are buying and how many people are selling on the platform. We wish to see that the customer's expense is consistent, and we will see this being on their top guidance views, and as long as it sits around the same amount it is, as long as it's not falling substantially, it's a good sign. And we also expect a company in this well position to have a great balance sheet. We want them to make hay while the sun shines. So now let's look at the income statement and cash flow statement. We can see here that we have a positive free cash flow. It's profit. This company actually managed to make profit about a year and a half sooner than economic forecasts thought it would be. This is clearly due to the growth in spite of the pandemic and the unemployment numbers essentially being massive user growth indicators for this company. We expect research and development costs for this company to remain quite high. This is because they want to release new products and find new ways of pipelining the industry that they're in for further revenue or to provide even better services. Revenue growth has up a whopping 70% year over year and is expected to remain so year over year for the next 5. This is setting itself up to almost have a valuation of something of Spotify in 5 to 10 years, which as an investor should really, really be enticing. And this pandemic isn't going away anytime soon. Unemployment numbers are still going to be sky high. We're still at a net loss every week when it comes to employment across the globe. So more and more people are going to need to find work, and these freelancer websites that allow you to provide your service from home individually and get an income are just going to grow and grow and grow. Looking at the balance sheet, the total current assets at the moment are $187 million.116. Company's total current liabilities are $81,939,000. The company has a very strong balance sheet. This is because the company has a net positive in total current assets, which means that the company isn't looking for that short-term revenue to essentially fund its short-term liabilities. The company also actually has $127 million in just cash, which means that it has a very cash-heavy balance sheet, which is exactly what you want to see in a high-growth stock. Some volatility and unexpected potential regulatory headwinds. This means that the company is safe from its own liabilities. So the quantifiables looking so good, let's have a dive into the technicals. So our general consensus for Fiverr at the moment, and from a technicals perspective, is we've had a massive run up, we're overbought and volatile. The long-term bullish trends are actually looking like they're going to still be intact, as we've had an amazing profit report and the markets still look very, very bullish from the broader index perspective. Future earnings reports will very likely act like massive catalysts for this company, and I expect it to hold quite a high valuation and to be trading at this premium for quite some time. Pullbacks are likely for this stock, but due to its nature of actually achieving profitability with its incredibly high growth rate, the volatility may offset its potential chance to be able to buy at a great intrinsic value. It may be a purchase at a great forecast or price to sales value or price to users value. However, in saying that, we did just have about a 15 to 20% pullback in Fiverr after it peaked out and blew off its top at earnings report when it announced its profit. So let's have a look at that price and chart movement right now. So on the Friday, morning in New Zealand, which is actually when your guys' US market closes on a Thursday evening, I looked at the chart and saw this. And as you can see, we've had a massive gap up, which is this purple circle right here. We can see that a potentially short-term bearish trend is forming from the peak and then the last peak. We can see that the RSI and MACD look incredibly overbought. They look like they're about to just trend downwards from a massive peak, which is fine. We can see that this price action is also incredibly high above the 200 MA, and now the 50 MA has diverged from the 200 MA to a point where we can say that this is heavily overvalued. This 300% movement in the past 6 months is pretty much people pricing in and figuring out that this company is very much undervalued when it comes to its growth metrics. This is because people are trying to find value in a post-COVID world. And people are going to find it in companies that facilitate and grow in spite of it, this being one of them. We haven't had a massive retracement as of yet, as we haven't dipped below the 200 MA in quite some time, especially not since its last massive run up. But as you can see with this gap, if I was to talk to you about exactly how gaps work, it would be that we have 3 types of gaps. We have continuation, breakaways, and reversal gaps. Gaps basically essentially mean that when the price action of a candle on the graph just jumps across either at an opening or a close or even just in the middle of a trading day at the announcement of news, we can see that the price essentially disconnects itself from the graph. Funnily enough, luckily I took a picture of the graph the next day and well, we were dead on the money. It was a continuation gap. Basically what this meant is that the gap needed to retrace or basically fill the gap right there, and we're going to see likely a catch up from the 200 MA and 50 MA to the price action, and then hopefully a continuation of that long-term bullish trend, disregarding any external factors that can come into this. So that's it for me today. That was Fiverr. The next video will be Lululemon. We'll do a stock analysis on that. Otherwise, please drop a like and subscribe for this video. It would help me out a lot. We're growing at such an incredible pace. And I want to keep facilitating more and more information and company analysis for you guys. Thank you so much for watching again, and good hunting.